In this episode, we speak with David Anderson, general partner at Ampersand, a Boston-based middle-market private equity firm dedicated to growth-oriented investments in the healthcare sector, with $3 billion of assets under management. Ampersand invests in companies that support the life sciences ecosystem, including laboratory products and services, contract manufacturing, pharma services, and specialty pharma. David joined Ampersand in 2010. Previously, David spent 6 years with Covington Associates, a specialty investment bank focused on middle-market M&A in the healthcare sector. Prior to Covington, he spent 5 years as a consultant for Boston Healthcare Associates. I'm your host, RJ Lumba. We hope you enjoyed the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of Growth Cap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
David, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Great. Well, thank you for having me.
Where I'd like to kick off is Ampersand actually has roots dating back to 1969. For the benefit of our audience, can you give us some background and history to the firm?
Yeah, well, the good news for me is I don't go back quite that far, but Ampersand's long history is one of our differentiators, right? Being one of the oldest venture, private equity, growth equity companies in the United States, I think is a testament to the pedigree that we've built up over the years. The original founding of Ampersand came out of the market crash in the late 80s when the big investment banks had to exit having their own internal venture capital groups. And our founder at that time, Rick Sharpey, decided to take the venture group out of Payne Weber at that time to create Ampersand. And we started off as exactly that, a venture capital group focused on specialty materials and chemicals. It used to be known as the SMC group within Payne Weber. So even at its founding, Ampersand was highly specialized in a very particular niche focus. It was broad in an industry standpoint. Back then, it was specialty materials and chemicals for any industry. But in the mid-90s, that's when things changed to focus on healthcare and life sciences. And that was driven by a single LP fund that asked us to apply our specialty materials and chemicals knowledge to the life sciences industry. That was the turning point when we said the life sciences and healthcare market is a really interesting place to be. Again, if we focus on specialty materials and chemicals, there's a lot going on in life sciences. So maybe we should start to focus on that. As many people will probably understand, you can't change your strategy overnight. It took from the mid-90s until 2011 for Ampersand to morph into 100% healthcare-focused investor and private equity. You need to slowly turn the oil tanker around when you're tweaking the strategy. And it took well over a decade for Ampersand to develop into the healthcare and life sciences focused private equity investor we are today.
You know, along these lines of the specialization needed, you have an interesting background as well. When I talk to investors and we talk about healthcare and life sciences in particular, not everyone can go into the space, pick it up, and be adept at it. There would be a steep learning curve, I think, if you didn't have a background. But tell us a little bit about your background.
Yeah, so I came at things a little differently because I came from the scientific side of things. I was a scientist by training, did my time on the bench, and really got to know deep into the science, right? That was my background in training, but also wanted to really understand how the business side of biotech, pharma, med device worked. So I pivoted after my time in the lab and finishing my PhD to go into consulting and then banking before becoming an investor to really learn about the business aspects of things. And that is a key differentiator for Ampersand as well, which is that we lead with the science. When we're talking to founder entrepreneurs, the first thing we want to talk about with them is their technology, their markets, the patients they are serving, the ideas that they have. We do get to financial questions and we do ask them about profitability and other important things like that, but we don't lead with that. To us, this is a transaction and building a relationship around science, technology, and opportunity first, and then the financial aspect is second. And I think that's a lot different than other firms that come in and look for a financial profile that fits them. And then they try to understand what the company actually does. So having a mix within Ampersand of people with technical backgrounds plus people with finance backgrounds is the perfect team to go into some of these growth equity type investments.
And can you give us an idea of the business profile of companies that you'd be most focused on? And are they generating revenue? If so, like to what degree? Are they profitable or soon to be profitable?
Yeah, so our profile is ideally it's founder entrepreneur run. We kind of like to be the first institutional investor, which does make it hard to find deals, but we don't particularly look at venture capital backed companies as being opportunities. We prefer to go in and partner with a founder and entrepreneur to help them take their business to the next level, not to buy out another investor. But we do look for revenue. 10 million of revenue is sort of the minimum. We can go lower than that if we want for special situations, but 10 million would be kind of a ballpark that we'd look for. And cash flow positive and with 1 to 5 million of EBITDA. And again, there's some flexibility around that. I think a critical component at Ampersand is flexibility. We don't have hard and fast rules. We'll look for ideally 10 million of revenue, can be a little south of that. Ideally profitable, but if it was an unprofitable business but had a runway where we saw profitability was just around the corner, again, we can be flexible. We're also flexible on the positions that we take, minority or majority. We're not control freaks like quite a few of our peer groups. We look at the situation and try to understand what the founder entrepreneur is really looking for. If they only want an investor to take 20 or 30% of the business, we've got to respect that and we've got to work with that. We can't just bulldoze our way in and take 80%. But if they do want to sell a majority of their business, we're perfectly happy doing that as well. So we have rules and we have parameters, but we also try to maintain flexibility because at the end of the day, what we're looking for is companies that we believe are going to be the leaders in their field. And sometimes that might be in this moment unprofitable, but it doesn't mean they're not going to be a leader in their field. And that's still a good investment opportunity.
And in terms of your level of involvement strategically and or operationally, are you always involved with each of your portfolio companies and to what degree?
Yes, we're always involved. We are very much a hands-on investor, and we make that very clear when we have initial meetings with founder and entrepreneurs. If they're expecting just a bag full of money to be dropped off and then we'll see you in the next board meeting or show up every quarter, that's not Ampersand. Ampersand likes to be involved. We like to work alongside a management team to help them solve problems, to develop strategies, to develop metrics, to monitor progress, and also to come up with new ideas, whether it be new organic growth opportunities or M&A. We do a lot of M&A, and we're constantly bringing new ideas to our management teams for ways that they can grow their business through M&A. They might not accept any of those ideas, but that's fine. The point is that we like to be able to present ideas and work very closely with management teams. So when we do an investment, Ampersand is heavily involved. We want to be a partner. We want a seat at the table. We want that founder entrepreneur or anyone on the management team to know that they can pick up the phone and call us or email us at any time with any question. And we're not going to judge them for that. We actually encourage them to maintain a very active dialogue with us.
Can you tell us about a deal or portfolio companies that best exemplifies how you interact and help companies and founders?
I think an easy one and one that we've exited already, but a prior portfolio company was Bremer Bio. And that's an interesting case study because when that originally started, the investment that started, it was a company called Florida Biologics. And it really was technically a department within the University of Florida. So again, just right off of the bat, it is an unusual growth equity investment. It's a department within a university. It's not a real company. How are you guys going to do an investment? And that's where our flexibility and creativity comes in. We loved the space. We had spent probably about 6 to 9 months mapping the entire space in gene and cell therapy, wanting to understand the opportunity set, the market, and all of the companies that were out there. And when we came across Florida Biologics, which is this department within the university, it was clear to us that it really was a company working within the university. It just really wasn't a formal company. So we knew that it wouldn't take much for us to set up a company, spin off the assets, and form a new co around that. The founder, Richard Snyder, he was an incredible scientist, but he needed a lot of help setting up some basic business functions. How do I set up my P&L? How do I order 200 computers for day one? Because we're not getting the computers, so we need to go buy them. How do we set up all of the back office systems? How do I build HR? How do I set up payroll? And all things that Ampersand has experience in, and we have a team that we can bring in to help set that up. So we set up the business essentially with Richard, but very quickly on, we realized that Richard was going to be the best scientist that we've dealt with, but he needed business management around him. And through our network, we actually came across 2 individuals that were looking to set up a business in the space that we were in. And we very quickly determined that a partnership would be the best way forward. We take the management talent of these 2 individuals, combine it with our established business that we had to create a real powerhouse in the space. So we did that all within the 6 months of spinning the business out from the university. We ended up with a world-class management team, world-class science, world-class facility. And that management team went on to take that business from where we started about 100 employees. In 3 years, we had over 700 employees. We went from about 40,000 square feet of manufacturing space to well over 300,000 square feet of manufacturing space. And we developed a company that was the leader in the contract manufacturing for cell and gene therapies. And that leadership position enabled us to exit the business to Thermo Fisher in a fairly short period of time for us of 3.5 years. But to create something from a university department to 700 employees with very substantial revenue and EBITDA and a world-class management team, to see that growth and to see their dream of providing gene therapies to these patients fulfilled, it's one that we're very proud of and we feel very rewarded by.
That's a great example. Curious, was that entity, Florida Biologics, already producing a fair amount of revenue within the university construct?
It was generating a small amount of revenue, but I think the key thing there was that everyone that worked in that entity, they only did commercial work. And that's why when we talked to the university was like, they're not researchers. They're really not a part of the university because all they do is commercial work. So it made it very easy for the university to partner off. We had a great relationship with the university. They were very encouraging of us to take the business out and to invest into the local area in Gainesville, Florida, maintain the employee base. So it was a win-win for the university as well as for us.
It sounds like a situation or a model that you could replicate with other universities, depending on how good the science and technology is coming out of that university department. Have you pursued that?
We have pursued that. We've tried a few things. It really does come back to the partnership. University of Florida was incredibly well-versed in spinning out companies. I mean, they invented Gatorade, right? So they are ready to do those things. There are many other institutions that are also very good at understanding how to create companies. There are some institutions that do not like to do that and they prefer to keep things in-house. So it's very situation dependent. But I think you hit the nail on the head, which is you've got to have that right mix of the science. They also have to have at least started some commercial enterprise. It cannot be a bunch of researchers. That's a venture capital deal. Florida Biologics was unique in that it actually had started and for a couple of years had been executing on commercial contracts. So it really was already a business, even though it was still part of the university. Those are nuggets that are out there, and we continue to look at those, but they're few and far between.
What areas are you most excited about, and where do you spend most of your time?
I spend most of my time on the advanced therapies and particularly on either the analytics, the clinical trial management, or the manufacturing for advanced therapies. I think that's an area where we've seen incredible scientific progress and continued development in all of the things from cell therapy to gene therapy to the mRNA world. COVID obviously helped accelerate mRNA to the forefront, and there's just amazing things that are being done and that these new advanced therapies are capable of doing. So we at Ampersand have spent a lot of time building our advanced therapy expertise. That's not to say that we do not also like to spend time on small molecule, the old traditional way of doing things. I am looking at a transaction right now that's on the small molecule chemistry side of things. Some would say that's boring compared with advanced therapies, but that's still a giant piece of the market. And advanced therapies have their place and are rapidly growing, but the whole biopharmaceutical universe is still pretty broad. So I think that's where Ampersand adds the most value, where our knowledge of these markets and these companies and these sectors brings the most value. When we partner with a founder entrepreneur, that's what they want from us, and that's what we want to share with them. And we try to not focus on areas where we don't have incredible depth of knowledge.
One of the areas that we like to touch on with firms, especially firms that have been around for a while, is the culture, because that's really what leads the firm to perform over the long term, is a culture that's instituted and supported of the folks that are rising up through the organization. So how would you describe the firm culture?
Yeah, our culture is very strong. We're not a huge firm. There isn't 100 of us. There's, I think, 35 of us here in Boston, and I think maybe 8 or 10 in our European office. So, being a smaller organization, there's a lot of interaction. And I think one of the key things is we have a good mix, right? We have a mix of technical knowledge. We have a good mix of the finance and the market knowledge. So, there's always collaboration because there's no deal team that doesn't have one of those pieces on it. And that's how we like to build our teams. So the culture here is one of a lot of collaboration, good deal teams with the right mix of people, and one that is really tied to our portfolio companies. Everyone gets to know our management teams. We get them together at least once a year so that not only are we just the Ampersand culture, but it's the broader culture of the portfolio companies as well. We encourage interaction between our portfolio company CEOs and CFOs and chief marketing officers. So it's a broader family with a broader culture. And I think one of the key things that we've been successful with is maintaining that network. And when those people join the Ampersand culture, it's one they want to stay in for a long period of time. And that's why we've had multiple repeat CEOs and multiple CEOs that then become operating partners, even people that try to retire from Ampersand. We just brought one of our old partners back to a board role. He thought he was going to be free to go retire and enjoy life. And nope, we never let them get too far away. So it's bringing the team back together and keeping the team together. I think that is why we've been doing this for 36 years now.
Excellent. Okay, last two questions. One is, can you tell us about a person who has had a profound influence on you?
This will sound weird because he's the founder and, this is not me sucking up, right? But the influence on Ampersand and myself is clearly from Rick Sharpie, right? He had the vision to get this out of Paine Webber. He had the vision to focus on the investment areas that we focused in on. And his initial vision, I think, still permeates through the entire organization. And that's manifested itself in some of our key things that we like to talk about. And one of the ones is what we call straight talk. Rick was a huge proponent of straight talk. And when I first met him, it was very clear that this was a very brutally honest, blunt individual. And that was the culture that he wanted to create. And we maintain that honesty and straight talk with everyone that we deal with. We tell them how it is. We don't sugarcoat it. We're just brutally honest. Sometimes that works in our favor, sometimes it doesn't. But at the end of the day, honesty and straight talk is where we are. And that's a cultural aspect that when I first met Rick Sharpie, it was very clear that you were sitting across the table from someone that would tell you exactly how it is and be brutally honest with you. And I personally like that environment. It's a very open, communicative way of doing things.
Excellent. Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Well, a charity cause. Well, I think the main thing, and I only think of this right now because I spent most of my evening last night fiddling around with stuff because I've got to put all of these signs up around my town for this charity that I'm involved in. And I've got to go out tonight. I'll be driving around at 11 o'clock tonight, putting signs in people's yards for the charity. And it's a local town charity to help disadvantaged families. And I think there's two parts to that. One is you've got to give back at some point, right? Private equity, it's a career that has its perks, and you should use those wisely and give back to the rest of the community. The other part of it is that I think charity begins at home and you should be on a small scale. It's sort of how we like to deal with our portfolio companies. These are individual companies. They're small, they're 40, 50 people when they start off. You've got to treat them like it's your own backyard. And that's why when I focus on charitable organizations, it's stay close to home, focus on something small where you can make a big impact, because that's probably going to give you the most reward. And I think that reflects Ampersand as well. Start small, make a big impact, and we'll be rewarded.
Wonderful. Well, David, I want to thank you again for taking the time for this conversation. It's been a really good one.
It's been a pleasure. I appreciate it. Thank you.